Is it too late to invest in AI? Nope, but you may need to look to the East rather than the US, where an AI bubble might be looming.
AI was mentioned 45
Massive
times.
AI bubble.
Which would mean that many companies are overvalued and investors could lose a lot of money. In this video, I'll show you where investors are finding better deals, and it may not be where you'd expect. Here's your Moniify Playbook. Humans have long believed that we were better than computers because we could create things like art and music. Well, things are different now. Artificial intelligence tools and apps allow computers to perform and automate uniquely human tasks. ChatGPT was the most compelling example of an AI app for the masses when it launched in 2022. ChatGPT, is it too late to invest in AI?
Not at all. Investing in AI is still a hot topic. While some areas might be more mature, there's plenty of innovation happening. Whether it's in healthcare, finance, or even creative arts, new opportunities are emerging all the time. So if you're thinking about diving in, it's definitely not too late.
And investors saw dollar signs and piled into US companies building AI tools. But with such high valuations of firms in the US, investors are looking elsewhere.
AI right now, at least in 2024, is a US-driven story, but we think the investment case is broadening to include more emerging markets starting from 2025. Emerging market tech trades definitely at a 20-30% discount to US tech.
AI ecosystems are flourishing in places like India, the Middle East, and Southeast Asia, where there are high AI adoption rates, government support for AI development, and strong engineering talent pools. For example, India produces around 1.5 million new engineering graduates each year.
China became a global manufacturing hub. India will become a global AI applications hub, and that again will drive a large part of the economy forward.
The Asia-Pacific region is the fastest growing AI market in the world, led by these countries, and accounted for a quarter of all global AI revenue in 2023. US tech giants are investing billions to build out AI infrastructure in Southeast Asia.
And there has been 200+% growth in Gen AI projects right here in Indonesia.
But before you invest in AI, you need to understand how the AI sector works. Here are the 3 layers of AI. First, the enabling layer. This includes the hardware and software needed to train and run AI, like ChatGPT servers and code. Second is the intelligence layer, made up of AI models such as machine learning, natural language processing, and computer vision. They take data and turn it into intelligence. The more data these models learn from, the smarter they become, and that's why data is called digital gold. Some models, known as generative AI, can even create new content. They underpin apps like ChatGPT, a chatbot that takes a prompt and writes a response. Or Sora's text-to-video model. You want a petri dish with a bamboo forest growing inside it that has tiny red pandas running around? And you get it in seconds. Finally, there's the application layer. These are the tools built on top of the models, used to solve real-world problems like ChatGPT, helping to answer questions. Each layer comes with opportunities, risks, and potential returns. Let me explain. Revenue from AI applications is expected to grow the fastest in the coming years, from less than $10 billion worldwide in 2023 to $395 billion by 2027, according to one estimate. And there's been an explosion of startups globally.
Like you're drinking from the fire hydrant of like apps and solutions and new technologies coming out all the time, and it can be really overwhelming.
To cut through the noise, look for companies solving high-stakes problems at scale. In emerging markets, AI helps fill gaps in critical healthcare services, like shortages of doctors, for example. Take Tricog and MedSol, that collect health data remotely from people in rural communities in Africa. That data is analyzed by AI to provide preliminary diagnoses of breast cancer and cardiac disease. Then there's these companies that built AI tools to make drug discovery faster and cheaper, while these firms detect disease early and assist in treatment planning. Then there are AI companies in emerging markets that are also helping to fulfill people's financial needs by offering microloans to people who don't have access to traditional banking services or a credit history. They use AI to analyze data from alternative sources to assess creditworthiness, like Confirm You, that built a 3-minute online game that uses AI to predict the likelihood someone will repay their loan based on their behavior in the game. While these Singaporean firms use AI to detect financial fraud, such as accounting manipulation or money laundering. Most AI companies are private and in the startup phase, so you can't buy shares on a stock exchange. Instead, you may be able to invest through a private equity or venture capital fund, and you can use a platform like Crunchbase to find funds that invest in companies that you're interested in. There are also platforms that allow you to buy pre-IPO shares from other investors. That's part of what's known as the secondary market. Now, keep in mind that access to private companies can require a lot of money and is often only available to accredited or institutional investors. If you can't access private markets and you want to invest smaller amounts, there are publicly traded companies building AI products like these IT giants in India, for example, even though AI is not their main source of revenue. There's also Abu Dhabi's Presight, a listed company whose majority shareholder is the AI-focused G42 Group. Presight's IPO last year valued it at $3.5 billion. You can easily buy their shares using a widely available brokerage account like TradeStation, which gives you access to foreign stock exchanges. But if you want an immediate return on your investment, then you need to look elsewhere. None of these AI applications would even exist without the underlying hardware. Remember, that's the layer that handles data and provides computing power. Well, AI infrastructure brought in around $40 billion in 2023 and is projected to grow to more than $500 billion by 2027. Swiss banking giant UBS sees more immediate growth for infrastructure companies.
We know that longer-term application companies will make money, but right now, not every company is profitable. So the risk-reward for the enabling layer is better today.
This includes chips, which crunch massive amounts of data and are at this time the most profitable part of this ecosystem. NVIDIA, one of the most valuable companies in the world, currently dominates the AI chip market. But there are other companies taking on NVIDIA with more affordable, energy-efficient chips. While design companies are mostly based in the US, the companies manufacturing and housing them are expanding all over the world, especially in Asia, where rows and rows of chips are held in data centers, along with the rest of the hardware required to build and run AI. And you can invest in the companies building them, from publicly traded telecom giants to pure play data center operators. While most are private, you can invest in them through a real estate investment trust, which trades on an exchange like a stock. Now, despite all this money flowing in the sector, hold on, there's no such thing as a sure bet. There are risks.
Probably only 1 in 100 of those innovations are really applicable to mission critical operations.
Some investors and economists are also questioning whether applications will ever make enough money to justify the cost of developing AI at all, which has been doubling every 9 months. If applications don't catch on fast enough, there could be an oversupply of AI infrastructure. Now, if you don't have the capital or risk appetite to invest in private companies, or you just want to lower your risk, there are alternatives. An ETF holds a diversified basket of stocks and trades on an exchange just like any stock. Check out these 5 AI-focused ETFs with exposure to applications and infrastructure. There are also ETFs dedicated to chip companies, as well as data center companies. However, most available ETFs focus on US companies with very little exposure to Asia. So, here's your full Moniify Playbook. Links to all the information are in the description below. Now, after hearing all this, would you invest in AI? Are you worried about where AI is going? Where would you place your bets? Share your thoughts in the comments and don't forget to like, subscribe, and keep up with the Moniify Playbook.